What happened to all the great cash flowing fourplexes and duplexes in Bryan and College Station? Good question. Stay tuned, I'm about to tell you. All right, in today's video, we're gonna do a market update, which means we're gonna talk about the most recent stats to hit from the MLS. We'll talk about interest rates, and we'll jump into why there's not enough duplexes on the market, all in this episode of Investing in Bryan and College Station, your go-to channel for all things real estate investment related here in our favorite towns of Bryan and College Station. So first off, let's jump into the market update. This just came out this week from the MLS, and we're looking at median prices that are fairly flat, $300,000. We did see more sales last month, so there is an increase year over year in terms of units sold, likely due to the interest rate drop we saw earlier this year. And we are seeing that inventory continue to grow. If you remember from last month, we crested 1,000 units actively listed on the MLS, and that has continued to increase. As a result, we're also seeing an increase in months of inventory. Keep in mind, 3.8 is still less than 5, so we're still in a seller's market. But again, this will feel more normal based on the last 10 years trends. Days on market are slightly down. We don't expect days on market to go crazy simply because the months of inventory are still in that seller's market, so houses will still sell relatively quickly. Last, let's look at the original list price to sale price ratio. What this tells you is whether or not houses have price reductions or the seller ends up selling at a lower price based on a buyer making a under asking price offer. In either case, houses are selling about 3.5% under the original list price. That means that sellers expect to have a price drop, and buyers either expect to watch that price drop or feel free to come in as slightly lower than asking price. All right, let's talk interest rates. That's the headline. Everybody wants to talk about it. So what's going on? Well, last month we saw a huge increase all the way up to 7.2%, and that is way too much for a lot of people. The good news is this month we saw a reverse course with interest rates now down in the low sevens, even as low as 6.99 as an average, according to Mortgage News Daily. So what's causing all this? To understand what's causing the interest rate changes, you have to understand a little bit about the economy and what's driving it. So right now, as I'm sure you're aware, inflation is at an all-time high, although it is coming in. That is the job of the Fed, to keep inflation in check. The Fed does that by adjusting what's called the federal funds rate. It's important to note that federal funds rate is not the same as a mortgage interest rate. However, there is an indirect / loosely correlation between federal funds rate and mortgage interest rates. So what we saw in the late 2023 timeframe is that the Fed announced that they're likely going to lower the federal funds rate in 2024. That is why we saw rates go from 8% all the way down to the low sixes. However, inflation reports came in pretty stagnant, meaning inflation was not coming down as expected, and that was based on the CPI report in January, February, and March. Those CPI reports resulted in an increase in interest rates from the low sixes up to 7.5. Now, recently, as of April, the CPI report came in more within expectations. That means the Fed is more likely going to lower their interest rates again. That made the markets happy, which is why we saw the rates come from 7.5 down to 7. So what's going to happen next? Really, it's anyone's guess. It's best to watch that CPI report that will be released for May. They will release that sometime in the June timeframe. If that CPI report is showing that inflation is coming down, then likely we'll see mortgage rates do the same. If that inflation report shows that inflation is stagnant or increasing, then you can expect the opposite, and we could see interest rates shoot up past 7.5 again. So lastly, what's going on with the multifamily market here in Bryan-College Station? Quite simply, there's not enough supply and demand is staying strong. So you might think that demand has fallen off because interest rates have gone up, but the reality is there's a lot of cash sitting on the sideline. So there's a lot of cash buyers waiting for a good fourplex or duplex. However, the supply is at all-time lows. Ever since the pandemic and the extremely low interest rates, we saw those houses sell off. Of course, investors love the low interest rates, same way as home buyers, and they started buying up all the houses. The problem is investors don't need to sell the way that a homeowner might need to sell. If you move your job and that moves you from Dallas to OKC, that doesn't necessarily mean that you also have to sell your investment property. So the lock-in effect is what they call that, is even more prevalent for investors. So investors with low interest rates are not likely going to list their house for sale, but buyers are still buying, which means we're watching the inventory dwindle. Right now, our inventory is at 19 units on the market as of Friday, 18th of May. The average over the last 10 years in any given month is about 50 units. So you can see we're well undersupplied. Back in 2019, we had as many as 80 to 90 properties actively on the market. So supply is super low. There's still a lot of demand. So houses are getting snatched up quickly, mostly by cash buyers. So what does this mean for you, the investor, either buyer or seller in this market? Well, for one, interest rates aren't favorable. As a result, your better bet is to negotiate a good deal on a house and then talk to your lender about the ability to refinance if/when rates do come down. That might take a year or two, so set that in as your expectations. So what do you do if you're a multifamily investor? Well, you've got two options. One, sit on the sidelines. I don't recommend that. So you can either wait for more deals to hit the market or make offers that make sense for you, but expect to be outbid. I don't love that as an option, so what I recommend is shift your focus over to single family. As much as I love multifamily, there's just more single family inventory here in our local market. So I would focus on that, set your metrics in terms of the ROI you're looking for, and start making those offers. Look for under market value houses, basically getting a good deal on a house, and then talk to your lender about the ability to refinance if/when rates come down. That wraps up this month's market update. Again, I'm coming out with a new video every single week, so stay tuned. I will keep you guys updated on what's going on in the market, when more multifamily are hitting the market, and other ways that you can make money here in Bryan and College Station. Make sure you like and subscribe, and until next time, you guys take it easy.